Hello guys, good afternoon. Today is Wednesday, September 28th. I'm going to be talking about today's price action, the trades, the bias, and many other things. And from today, I'm going to try to follow a new little bit of a format for the videos. And the first thing that we will discuss on a day resume is the bias. What I thought it was going to be and why. Then we're going to jump on what it ended up being and how could we determine that that was the bias, right? So let's jump onto what I thought was the bias. That if you paid attention to my Telegram, I was basically pretty bearish, just trying to follow that trend, right? The trend that we had through Monday, Tuesday. And well, if we go further back into the past, we basically can see how price has just been going lower. And I was just expecting price to continue to respect that. Now, today we didn't get that, but let's talk about the reasons, right? Why could have I thought that we were going to be bearish? We have multiple reasons to believe that. First of all, the weekly bias has been bearish since Monday. It has just continued to be going lower. And as you can see, we did take this low today, right? What else did we have? We had the fact that this impulse, the other way around, I think it was. I don't think it was from this high. No, it wasn't. From this high, right, we had that there was a 4-hour fair value gap, equal highs in the 1 hour. We can see it in the 50-minute as well, multiple equal highs in here, and the 50% for the retracement, right? So we could have definitely expected the price to get up to this to then just continue going lower. That was my main reason for it. And again, this buy side liquidity was pretty clean in my opinion. So we had multiple reasons to believe price could be bearish, right? And that's why I was bearish. Now, we did have reasons to believe it was going to be bullish, as it was. Obviously, the bias ended up being bullish. And let's talk on how could we determine that the bias was going to be bullish. There's not much, but there's few things that are really important into deciding that today could have been bullish without much of a hesitation, right? First thing that we have is that we're going below this low, a pretty important low, because keep in mind that when price goes aggressively in one direction or the other and it just stops and immediately reacts either aggressively or slowly, just going in the entire opposite direction, retail traders see that as price going really aggressive to the downside, and out of nowhere it respects a level and then it starts going the exact opposite direction. So what is retail going to believe with that? There's a very strong support level here for some reason that price could continue to respect. So the next time that it comes around, it could bounce off just like it did here, right? And of course, exactly happens the exact opposite, basically just go below that, and well, then it goes maybe higher. If we pull this line to the left, maybe we can find something pretty far to the left. Let's try it out. No, not really. This is the low, right? This is the low. As you can see, it doesn't really do that much, if we can be honest. So yeah, nothing for us to do there. Let's go back to 15. So why is that important? It is just a run on a low overall, right? But again, it's a pretty important low because it will be held through the price action of 2 days, right? It was quite aggressive the way that the low was created in both directions, right? So in my opinion, a pretty important low taken here. Now, what happens when price takes a low as sell side liquidity, a low, important low in this case, right? Because we could say, well, this is a low and it didn't really do much. This is a low and it didn't really do much when it broke both of these lows, right? But as an example, you have this low, which is a bit more important than this one, as an example, right? And when it takes it, it retraces a bit, ranges, and then continues with the trend. So when a low or high is taken and it is an important low or high, you could see price either consolidating, retracing, basically doing something to react after the fact that it has taken a good amount of sell side or buy side liquidity, right? So we have that to begin with. That was taken through yesterday's Asian session. Then we have a little bit of a range, right, from this low to this high approximately. As you can see, price ranged inside these two levels for a bit, takes those highs, takes those lows, and then it goes aggressively higher. So what do we have here? We have run on buy side, run on sell side, aggressive higher, market shift, fair value gaps in the 5-minute, the 15-minute doesn't really show that. So we do have a pretty strong case where we had break on a low, right? Pretty aggressive sell side liquidity being taken there. Tiny bit of a range that created even more sell side liquidity that is also taken. And then you see aggression higher that if we go to a lower time frame, we can see, oh, actually, no, this was the messy price action that we had on the impulse that it really didn't like because we didn't have any kind of fair value gap to actually use, which is truly a shame. But well, we have fair value gap, we have order blocks in the 50-minute, the 5-minute as well. But the thing is that if we look at it from this perspective, what is it that we actually have? We have an impulse aggressively higher after taking sell side liquidity, and that impulse price later retraces into it, right? Keep in mind that this will be Fibonacci. It retraces, oh, my bad. On the buy side is the opposite, I think. Retraces and still respects the low, meaning that this was just, again, a retracement. Now, what happens when it retraces? You have a tiny bit of a couple lows, right? That is creating liquidity. Then you see those lows being taken aggressively, then aggressively goes in the exact opposite direction, creating a market shift. And if we look into this price action, we have fair value gap in here and fair value gap in here. So what happened basically? We have a very important run on sell side liquidity on this low, right? The low that we saw from daily chart and other charts. Then this tiny bit of a range takes buy side, takes sell side, and then we see a major move up that of course could have been a Judas swing, could have been a run on buy side liquidity to then just continue lower. Overall, right, that could have easily happened. But see this, how it retraces somewhat aggressively, respects the low, and also takes sell side, market shift, fair value gaps, potential entries into lower time frames, right? That's how you could have determined that this was a structure that's being just respected, right? What do we see here? We see an impulse. This is when the buy side liquidity run happens, but we see an impulse, right? Takes a high, retraces, again, exact same thing, right? Retraces, still respects everything, maybe even 15 5-minute order blocks, right? And everything might have something in the lower time frames, not really interested in that. And you see price going slowly higher, and then a little bit of an aggression, takes the high, retraces, takes a low, mitigation of fair value gaps, sell side liquidity, range, and aggression higher. So let's sum up a bit. How could we determine that the day was going to be bullish? I don't think we had 100%, not 100% probably. I don't think that we could have easily said that the day could be bullish, but we did have reasons to believe so, right? Again, pretty important low, taking a sell side liquidity, range, creates sell side liquidity, takes that, and then you see aggression, retracement, aggression, retracement, continuation of that trend, pretty much being just respected, right? You see how price starts creating those higher highs, higher lows, higher highs, higher lows, higher highs, and again, respecting previous lows where there are fair value gaps or the blocks, and so on and so forth, right? So could have we determined that the day was going to be bullish? In my opinion, we did have good reasons to believe it could be bearish due to the sell side taken up there, the buy side, sorry, taken up there, the 50% retracement and all of that, and the buy side taken from, as an example, a high like this or a high like this, as we will discuss now. And we definitely could have, but even as you'll see in a second, even if we would have, I don't think we would have managed to actually get an entry. So let's look now, pass on to trades of the day, and let's look at the opportunities both ways, right? When are we trading from 7 to 10 or up to 11, as I tend or used to do, right? So what do we have? Phase 1 starts going aggressively lower, then continues higher. This is the New York Open. As you can see, it trades a bit higher, trades a bit lower, consolidation, continuation higher. Now, going back to the basics, right? We have the run and stops, 5-minute, 15-minute displacement, lower time frame trades inside those higher time frame fair value gaps, lower time frame displays as a market shift, and that's when we would execute in the lower time frame fair value gap, right? So if we look at it like that, let's see when do we actually get that. As I mentioned earlier in my Telegram, this is a high, or this one, either way. These two are the highs that I would have liked to see taking a buy side liquidity to then be able to look for sells. And for me to look for buys, I wanted to see something a bit more strong, like this low, or maybe could have been this low, depending on the reaction that we got, right? So this is buy sell liquidity. We have step 1, run and stops. Step 2, 5-minute market shift. Displacement, the fair value gap was somewhat tiny, but in my experience hasn't been that bad. Whatever the size of the fair value gap is actually. And what else? So reason why I still counted it as a good area to look for opportunities. And then we have price trading back into it, and we'll see the execution. So let's talk about this sell first, which is a sell that I took on paper trading, and that if I was trading on funded or challenge, I would have taken, because in my opinion, we have, as you were able to see, we have everything that we're looking for theoretically in favor of the trend that we've seen for the past few days. We do have extra confluences, as again, the run and buy side liquidity taken by this aggressive move higher through London and everything, right? So even we also do have a tiny bit of a lower time frame entry in the after the run and stops, but that doesn't matter. So this is the 5-minute fair value gap. Price mitigates it here. No fair value gap, goes higher, takes this as buy side liquidity as an example, starts going aggressively lower. We have a market shift below this low, fair value gap in here. That was my entry. And also, if we didn't want to count this one, we do have this as a market shift and could have tried to execute on this, right? My entry was right above this high. Price triggers me in on this candle, and that was the only entry on the sell side that I could have taken with, again, this 5, the criteria that I wait for an execution, right? That would have been my entry. And what would I target? This. I would have been just fine with this, because we're talking about where was my stop loss? On that level, I was getting 5.23, so maybe above this highs, or maybe just 5.20 something I was getting, maybe 5.25, I can't really say for sure, but the trade was somewhat something like that. As you can see, it does start well, goes against me, ranges, aggression lower, aggression higher, and then just completely flies higher. In my opinion, a valid entry. I would have been happy, well, not happy, but fine with taking this loss if I took it on challenge or funded trading, because again, we have everything that we look for. And the only way that we could have avoided this loss, again, would have been with bias. Now let's talk about the buy side. We never really got a run and sell side liquidity through the session or close to the session. And the only run on liquidity or run and stops that we have are, as an example, this back here. And I think that is it. Yeah, well, this, but of course this happens through London again. So as an example, the only fair value gap that is actually mitigated through the times where we could have executed would have been this, and we'll see what we get on that. And then could have been this, but after such an impulse, I wouldn't really be that interested in trading. But again, do we have a run stops that then creates 5-minute or 15-minute displacement or market shift? We don't, right? Because this is a low, taking a sell side liquidity, aggression higher, but no fair value gap. Maybe this later on, so we could have looked for lower time frame entries on this. We'll see if we actually get something. I honestly didn't check, but I would have not been interested in trading something like this, as we're pretty high up, right? So let's look into the lower time frames for this. So the low of the order block of the fair value gap might be this, and then price mitigates it. Here, there's no lower time frame entry in this first move. Goes lower, takes a lot of sell side liquidity, right? Aggression higher, this could have been the market shift. And then we have this as our potential opportunity, right? So 5-minute fair value gap, 5-minute fair value gap, 1-minute fair value gap, execution. Well, this would have been the trigger. And 75 plus 2, 77. Target being bullish. Oof. Complicated, because I would have not gone all the way up to that high as it does get. But for sure could have been fine with 5R. Let's leave it at that for now. Now let's go to the other fair value gap. 5-minute fair value gap. This one does happen after the run stops, so a little bit better. No market shift to execute this entry. Market shift on this. No fair value gap to execute on this. a little bit of a range, definitely a market shift, tiny bit of a fair value gap, but I'm not sure if I would have taken that. So 5-minute fair value gap, first mitigation, nothing. Second mitigation, nothing. Third mitigation causes a market shift, but there's no fair value gap. I mean, there's this one, right? But it's mitigated already. Goes lower, respects the low, takes the low, rushes higher, market shift, tiny bit of a fair value gap. This could have been an entry. I do believe it's a bit unclear what's actually going on, but could have been just fine. Stop loss probably below this low, talking about 60, 60, 62. And theoretically, if the trend is right, we would have been looking for this, meaning 6R, going for that higher high, right? Theoretically. Now, sure, we do get entries in this a couple of lower time frames, in these fair value gaps, but this fair value gap didn't take liquidity, isn't created after taking liquidity, right? It doesn't cause a market shift after taking liquidity, as an example. We do get the lower time frame entry and it works out wonderfully, right? Even if we would have allowed it to run farther than that, we're talking about right now, it could be running at 16.57R, right? It's so lovely, but there wasn't a reason for me to take that. Now, as an example here, so let's avoid that one. We take this low as liquidity, we see a little bit of a move, but that's a range, and then we see aggression that ends up generating this fair value gap, and we could have said that market shift does happen here, so this fair value gap is kind of in the middle of that, right? So we could have said that maybe this is an opportunity or a fair value gap to pay attention to, and we do get the entry, although again, this would have been complicated. Maybe could have entered on this one, but again, it doesn't cause a market shift, so it's complicated in every way. And this one would have been somewhat fine, but again, the fair value gap is somewhat tiny, and yeah, we're just mitigating this over and over, so I didn't really like it. I was looking for a lower time for opportunity on this to take on paper trading, but nothing I would have actually taken on challenge or funded accounts, because it just, honestly, it was past 10. Trend could have, at this point, it could have reversed and continued lower after taking all of the buy side, retracing further than the 50% and everything. So I would have not been really interested in taking any of this on a funded or challenge account. But yeah, this one and the previous one would have been really nice opportunities, but in my opinion, again, nothing that I would have been able to take, except maybe this one, but would have been complicated, to be completely honest. So that's pretty much covering the trades of the day on what I took, the both size opportunities, and did the steps show up? Well, on the sells only, in my opinion. And again, maybe if we would have considered this as our this as a run and stops, which is somewhat tiny, but well, it is a run and stop. So overall, we also have market protraction as a little bit of an extra, and then the aggression. But again, I would have not really liked participating on that on a challenger funded, maybe in paper trading, because again, I take pretty much everything that I see on paper trading. And that's pretty much it. So now we'll jump onto the conclusion, which is, first of all, what I did good. And in my opinion, I did good in risking my risking capital on this one. It's a good sell that the only way that I could have avoided it would have been by understanding that price is bullish or is likely to be bullish due to the run and sell side and everything. I do believe it's still somewhat of a valid entry to try and take, even if the trend is showing bullish signs, right? But at the same time, I would have had to consider certain other things. But as an example, I mean, I was looking for confluences in both sides, right? It's not that I only focused on the sell side. It's just that we didn't really get the confluences on the buy side, right? When I was expecting this price action to get the entry in the 1 minute, I was seeing the aggression in the 1 minute, right, which is this, and I said maybe in the 5 minute we might get some fair value gap to buy from, and we've taken liquidity. Even in the lower time frame, we can see that we have a couple of lows that in the 5 minute don't really show up because we barely have a tiny bit of a low. But again, it's a run and stops, and we're seeing aggression, but we never really got the fair value gap until this one, which happens pretty much at the end of the session and without, in my opinion, a clear price action, right? In my opinion, I had a pretty good session. I would have ended up in a loss on challenger funded and with 3 losses on paper trading, because I actually took the lower time frame entry that we discussed after the run stops, the run above this high, market shift in the 1 minute on this low, execution on this fair value gap, aggression lower, then the 5 minute fair value gap, this is the execution on the 5 minute fair value gap, and then the execution which I took on, I would have taken on challenge or funded, right? And that's pretty much it. Then the loss on this aggressive candle, right? That's it on what I did good in my opinion. What I did bad was maybe not giving it as much importance to the run on stops down here, the run on sell side liquidity that we had below this low. I did record today's session, but I don't think it's really worth uploading. But as an example, I did mention that after such a low being broken, we could see a retracement. But in my opinion, as an example, the fact that this retracement had already taken this highest liquidity, we could see price actually retracing down. Sorry, not retracing down, but reversing to the downside. Also, I did mention, I don't know if I mentioned it through Telegram. I probably should share the thing is that this is aggression. This is a retracement. Right, you can see how price quickly gets all the way up here. I'm just ignoring the wicks because I don't like this kind of wicks. Just ignore them completely in this case. Look at how price quickly gets all the way up here and then slowly gets back onto, well, in this case, a 50-minute fair value gap and 50-minute order block, as we were able to just see. That was actually a little bit, as an example, this could have been something that we could have considered, as it is respecting 50-minute order block and fair value gap. Right, and we have that somewhat of an order flow already because this is an order block. Then there's another one here, taking sell side liquidity and everything. Something else extra to add per se. So in my opinion, my good was the analysis on the sell. The fact that I believed that that was a good idea to be selling from there. In my opinion, it was. Again, the only way that it could have avoided that was by understanding that that the trend could be bullish at the time. On the other hand, we have the fact that what I did bad was, again, not giving it much importance to all of the sell side liquidity that was taken, and the fact that price was respecting this order flow, price is retracing back to order blocks for value gaps and other things, and then continuing and going higher, right? And as you can see, we actually have this, which I did miss out on. But again, it's a 50-minute fair value gap that doesn't come from taking sell side liquidity in this case, right? If I saw this after a run on sell side, and also this happens, again, exactly this, let me actually just draw it. If we had a low, price takes sell side liquidity, aggressively goes higher, right? We have the market shift, and this is in the middle. I'm definitely looking for a lower time frame opportunity on that. But this is not where it happened, right? So it is what it is. There's nothing that I can do about that. And again, as I mentioned, I don't really think I missed out on anything or any detail. Again, we have the exact same thing, right? We do have a fair value gap where we can look for opportunities. I'm not saying we can't. It's just that the way that I'm executing trades lately, which is exactly with this, doesn't really allow me to trade this, right? This will be what I would consider my phase 3 type of trades, where price just already has a trend, starts creating fair value gaps, price retraces back into them, gives us a lower time for opportunity, and we just ride the wave, right? We just go with the flow, simply. So yeah, that is pretty much it. What to do different will be the last part of this new format. And considering important lows or runs on important lows, so important run and stops, right? Run stops, as they can be key to determining if a bias is going to be either bullish or bearish, right? I think that was my mistake today. And even though, I mean, again, the only thing that would have actually allowed me, or that understanding that the day was potentially bullish, the only thing that would have changed for my trading today is avoiding the loss, right? And maybe avoiding the loss, because even if I thought that the day was bullish, I could have still tried to take that sell, in my opinion. So yeah, it is what it is. You know, I don't think we missed out on anything. Could have been a little bit of a better day by avoiding the loss, but I'm pretty happy with it, honestly. And the week is just all right so far, so I'm happy with that. That is pretty much it. I hope you enjoyed this new format, and I'll be talking to you tomorrow.